Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, August 13th, 2020. What we're going to do is start out with the broad markets, take a look at the both the near-term and the intermediate to longer-term outlook. That's something I haven't touched on in a few days. I do update the near-term charts, which we're looking at here, 60-minute chart. Do those pretty frequently, but from time to time it's good to take a step back and look at the longer-term, the daily charts or even the weeklies. I'm not going to spend a lot of time on the markets. We're going to look at the S&P 500, the Nasdaq 100, and we'll look at the small caps since we had a sell signal triggered on those yesterday. And then, time permitting, I like to do a quick update on gold. I've posted some pretty extensive, frequent updates recently. So we'll just wrap the video up with a quick look at silver and gold, and then maybe do an update later on some other trade ideas, such as the agricultural commodities, the ag input stocks, things like that. Some of the other things I've been watching. All right, so starting out with NQ, Nasdaq 100. This is a 60-minute chart. This is the most recent sell signal we had. We go up. There's a longer-term trend line here that was broken and back tested. I'm going to zoom out in just a minute. We're looking at 2 months of price history here on a 60-minute chart, hourly candles. And so this was our sell signal right here. Boom, pulsive move down. We stair-stepped at the first, second target. Had a little consolidation around that level, reverse shy of the trend line, and we're pushing back up to test that previous high right there. So added a resistance line since the last update here at about 274, give or take. Again, it's that previous reaction high. Now, what I'd point out here is any new high, should we move up from there a little bit higher anytime soon, will still be just simply an extension of the previous divergences. In other words, we had negative divergence in place at that last high. You extend the lines out, it keeps those divergences going unless we move up much higher on the NASDAQ. Then we burn through the divergences. But as of now, the divergences have only grown larger since this high, and this still appears to be a kickback rally in what's likely to be a much larger correction there. Those are some near-term targets where I just showed you here there. I'm not using an arrow tool. I'll draw out, but those are your arrow breaks, and there's the preferred swing target here. Now let's zoom out just a little bit longer. Let's go out to 3 months, and let's turn on the volume, and we'll look at a few things here. I'll put the volume on in 1 second. But when we get to the daily chart of QQQ, I'm going to highlight this is the longer term, the more important uptrend line. So, when I say sell signals, I need to be clear if it's not already implied. If I'm showing a sell signal on an intraday chart, a 30-minute, 60-minute chart, we're in an uptrend, but these are these corrections within the uptrend. These are the sell signals I'm referring to. These average I'd say about 6-7% on average, these corrections. There was the last one right there, and that one, same thing. You had a correction one, put in a marginal new high, equaled that high right there, and you kept the divergence intact here, at least you did on the RSI, and then you had an even bigger drop the second time around because you had even larger divergence, DH1, DH2 right there. And so that's what we have at this point in time. Same thing, divergence, divergence, and equal high right now, and at minimum I'm looking for another test of this trend line at minimum, but I'm going to get to the daily charts in a second. And when I do, then we'll look at the significance of also the possibility of that trend line breaking if and when it's going to happen, and then where do we go from there. And before I leave this chart, something else I point out in the past, this is again a 60-minute chart of NQ. We're still in a 3-month time period. You can see this pretty clear, pattern of, these lifts during an uptrend, and as you're rising on diminishing volume, here's your volume down here, volume bars on the 60-minute chart, you get the correction. So you can see these little volume, these trend lines on the volume correction, little correction, another, corrections occur on above average volume. Sometimes I'll show it there. That's when the volume spikes. And again, what you want to look for are these patterns. I like to look at not just one thing, but different things in conjunction. So not just negative divergence, not just a trend line break. Obviously, that helps to get a sell signal, but also are you seeing diminishing volume? Because that's usually the recipe for correction. When a stock or the market is rising on lower and lower volume, means fewer and fewer people participating, then you get those corrections. So again, without fail, or very few exceptions, I should say, you can see the volume tapers off, and then you get these corrections that follow. Volume tapers off, We didn't get one there. There's one exception, so like I said, with few exceptions. But for the most part, you can see it here. And so that was it. Last time we had this divergent high, you also saw taper in volume right there, then the correction, and here we are again, volumes tapering off. Now, it could continue to taper. It could look like this. We could move a little higher, or we could play out for a correction right around here. And in sticking with the NASDAQ 100, we'll get to SPY and the small caps here in a second. Here's where we're at now. Remember, bigger picture. Same levels I've had for weeks, if not months here. These are the levels that need to go. Here's your primary uptrend line on QQQ, and that has not been taken out. So although we had some near-term sell signals on the 60-minute charts, typically good for those smaller corrections, it's going to take a break of this trend line to trigger more of a swing or trend tradable correction. I'm talking a correction that lasts not just a couple days, but one that lasts several weeks, even several months. And that's the trend line I'm watching, as well as these levels here that I've had highlighted in blue for a while, 251 or so, and also 242. Although at this point, the trend line prices are well above those levels that I would consider this the sell signal when the trend line goes, that being the first target now, second target at this point. Back here, I was looking for a break of both of them, which we never got. But as you move away, there's enough meat on the bone, to put on a swing short for that. And that's about 8% below where we're at right now. So again, make no mistake about it. There are absolutely zero sell signals on the daily time frame. At this point in time, and we're still comfortably above the uptrend line, so the uptrend, the primary trend, at least off the lows here, is still very much intact, but the divergences continue to build. We had divergence there, and it continues to build, so the negative divergence is still very much in place on both the PPO and RSI, and but as I say, we've had it since this point here. Divergence is not a sell signal, break of a trend line, candlestick reversal pattern, something like that. Those are your sell signals, and so this is the one I'm waiting for. All right, we'll loop back since we're on the daily time frame. We'll just look at SPY. Same thing, we've had the same trend line. Blue's the trend line that needs to go on SPY, and we're still comfortably above it. Divergent high, the negative divergence that was in place right here at this previous high is simply extended. We remained above trend. And at this point in time, although that's a big level that would open the door to more downside, it's now the first target at this point. We've moved up enough to say that this would be your first target. Well, I'd have to sharpen my pencil. Let me put a level right there. I can tell you, expect a reaction around 326.70 or so. I definitely see some pretty good support there. There's gap support, reactions here. So that would be first target. Again, if we reverse now, if the sell signals that we just triggered on the 60-minute charts do play out for a small near-term correction. And again, because of this is why I like to jump back and to the longer-term time frames from time to time. This is bigger picture stuff here. This is daily chart. These are big divergences on the daily that usually lead to the big moves. Just like we had positive divergence at the lows back here that was pointed out in March, that led to the big move here. Just like we had negative divergence at the high back in February, led to the big drop or preceded the big drop. That's what we're looking at here. So again, smaller picture, 60-minute charts, but one little breakdown there could has the potential to send us down to and possibly below the daily uptrend line. So that's what we'll continue to watch. IWM, we'll get to the 60-minute charts in a second. Really not much. A trend line, the only trend line I have here on IWM is way down here, so we're comfortably above it right now, but big divergences in place right there. Here, I'll put the divergence line up top so you can see as we move on up. And this was a very technically significant level back here. Let me turn that line a little brighter and give you a level here to mark. You can see there was a big old gap. There's a lot that happened. We had a breakout here, breakdown, wedge breakdown, back test, rolled over, bounce, and then gap down to it, and then broke down and started the waterfall selling. So there's a pretty significant, technically significant gap right there that kind of kicked off the whole COVID party back in February into the March lows, and so we're coming up on that gap resistance right now, a little bit overhead. And again, same story, negative divergence. So the trend is up. No sell signal. Well, we did have a sell signal. Let's jump now down to the futures. Since we're on our small caps, we'll start with RTY, 60-minute chart here. I pointed out yesterday we broke this uptrend line right here. a little price channel on the RTY, or the Russell 2000 small cap futures. So again, it's 60-minute charts are usually good for these trades. That can average probably maybe a little more than 7%, because the small caps are a little more volatile than the large caps here. That one didn't pan out for much, but it was certainly a correction, more so in time than in price. That's what I often say. Securities can correct in one of two ways: either price, like this over here, or in time, or sometimes a combination of both. Either way, it's a sell signal, but we need to now take out. You can see we had the negative divergence. Let me just tighten this up a little. Sometimes I know it might be hard to see these in the video. Right there, about 1570.20 I've added a line at. We hit that level there, reaction, we've been dancing on that. So that would be your next sell signal, break of 1570.20. Open the door to the next target, 1536, and then 1494. So let's just focus on this now, see if we get that next sell signal there. Of course, it's a counter trend trade to the larger trend, to that daily chart I started on, so keep that in mind. IWM 60-minute chart, let's see if I can pull that for you. Okay, I believe I posted this one yesterday. There's nice, clean little uptrend line. Takes the form more of a wedge here, at least that's your divergence line right there. And then there was your breakdown yesterday. It was pretty impulsive, and just like RTY, the small cap futures, IWM, you're dancing on this level recently, so really needs to take out about 156.23. Open the door to the next target here, and you can see my target. So right now I'm eyeing this 145.63 as a near-term pullback target. Minimum, I think, if we can get the next sell signals here, which I think will come, then we get at least down to 146.26. What would that be? It's nothing huge at all, but about a 5.5% drop. If we get down to that 145.63, about 8% drop. And again, keep in mind, what does that do if we do get that? We're going to move down here, and we have the potential to take out this trend line as well as those trend lines on SPY and QQQ. So I just wanted to say that sometimes it takes a catalyst, one of those little breakdowns that seemingly innocuous break, as far as the technical picture goes on a 60-minute chart or a 30-minute chart, but then that little correction leads to the bigger breakdown on a more significant daily trend line like that. So we don't have those breakdowns yet, just the short-term stuff, and they're counter trend because the primary trend is up right now, so that lessens the odds that they're going to play out. Anytime you take a counter trend trade, it's doesn't have the same success rate as a trade. Let's say right now, a bullish setup on an uptrend has a better chance of playing out. I'm just not seeing this. Market's grinding higher. It's not consolidating. It's not setting up in bullish continuation patterns. It's just moving higher. It's being pumped with liquidity, and so therefore I'm just not seeing the bullish alongside setups right now. At least my kind of setups, the ones that I like to see. Okay, and zooming down a little shorter on the S&P 500. This is ES, the 60-minute chart of the S&P 500 E-mini futures. Friday, I think we had the sell signal on only the NASDAQ 100. We followed up earlier this week, I think it was, with a pretty impulsive and clear breakdown on the ES, the S&P 500 futures we're looking at here. Hit that 33.25 support. Round up, that's 97. We don't trade in 0.03 increments on the ES, quarter point increments. So that's 33.25 right there. And that's it. We push back, testing that same high. So really, you can draw a little resistance line right there. This is also the S&P 500 trying to break out the new all-time highs. So it's like, on the daily chart, more significant there. We'll get to that in 1 second. But those are the levels you need to take out to open the door to more selling. That we already checked that and hit that target once, 33.25. Now that's your next sell signal if and when that's taken out. Opens the door to the next target, 32.8226, we'll call it. And then 32.25-ish right there. And ultimately, I think down here to this target zone, it runs about 31.75 to 31.90. Let's look at the bigger picture. And there it is. So we'll put a line up there showing you that the S&P 500 is flirting with that previous all-time high pre-COVID right there back in February before the market fell off a cliff. So obviously a very technically significant level, just like those levels on gold and silver that we rallied into recently. You know, when you run into those, you know, with gold, it was the previous bull market high as well, but that went all the way back to 2011. I'll try to get to that here in a second. That's it. So you're at resistance, at least a very significant reaction high. So that is considered resistance. Usually that's where traders will step in and you know, sell or short. And you still are well above the trend line. These are the same levels I've had for a while. The blue line we need to break. That would be our sell signal here on the daily chart. And then the next one would come on a breakdown below 318.30 or so. And that would be, I can't grab it here. It's going to move everything, but it would be a pretty decent drop. It'd be about a 6% drop to get down to that 318.30. And again, it's this negative divergence in place, just like you had back here at the February March highs, that says odds favor that we will get a, you know, correction soon, a trend reversal, a tradable correction for, when I say tradable, for swing traders that, you know, can, you know, aren't as nimble and active, don't want to jump in and out on these 4, 5, 6, 7% corrections that we've had using these 60-minute charts for months now. This is where you can, you know, put some positions away for a little bit longer term, for weeks, possibly even months. Okay, and moving on to gold. It's another, you know, where I see, well, actually more trading, more potential right now in the miners and the metals than I do in the stock market. Blow off top right there back in 2011. That was the end of the previous bull market in gold. That was followed by a bear market that ended in late 2015, the December 2015. Gold bottom, been moving higher since, and really started to get some traction when we took out that 130 level. To me, that was always a big level. That was a big basing pattern. Boom. Took that out, and the bull kind of kicked into high gear like it was back here. So this was early stage bull market action, made a series of higher lows, but more consolidating basing. And then at that point, it went on. It was very clear that the bull market was, you know, gaining strength there. But we ran into, just like the S&P 500, but on a shorter scale, we ran into a major reaction high, the previous bull market top. So that's I mentioned at the time being what I believed would be proved to be a momentum fueled overshoot, which so far has been the case. We overshot it, but then moved back down below it there, and so we're still above it. I'm sorry, still below it. And you had that kind of parabolic run recently, and I'm viewing this, that was a bull market blow off top that marked the top, the end of the bull market. To me, I believe this is just a near-term buying climax or blow off top. And what I mean is, you can look at the volume. You see, you get these buying climaxes when you get these near vertical surges like that in price. Prices go nearly parabolic after an extended run, and you see a big surge in volume. I don't know if you can make it out there, but that's the volume. The average volume before that was somewhere way down here. So big move, and again, that's indicative of a buying climax. And so my targets remain, you know, like I pointed out on the daily chart. Let me add that line. You know, we hit support yesterday. I was saying that, was it yesterday? No, it was the day before. It was Tuesday. I said, look, that's probably it for now. Odds favor a bounce. And we also hit, you know, backfilled that gap. That's big support. So the buyer stepped in there on gold, and was a very good place to cover shorts. Game a bounce if you're an active trader, which we've had so far. The bounce in silver has been even stronger. Let's go back to the daily chart, and we also have this uptrend line. But more importantly, there's that support zone. There's a gap right there, gap here, and we hit that my first target zone, 181 and change, down to about 179.33 or so. That's it. So hit it, consolidating, possibly taking the form of a bear flag. This is like you can't see it because there aren't any candles here, but you had an impulsive move down. A gap is the ultimate form of an impulsive move, and we're kind of consolidating here. And should we break down, which is I suspect in favor, that would lead to a move down here to my X target around 168.70. But to do that, you need to see a break below yesterday's lows right there in gold. That is low of about 179, we'll call it right there. And it'll take out that trend line as well. GC gold futures. It's been a pretty lucrative trade here. We had this uptrend line, but most recently it was a break of this one that really got things going. So we had a trend line there that was just briefly violated there, a little whipsaw, but there were enough reactions to leave that trend line. So that was your early or first sell signal in gold right there. Moved down, hit the second trend line, had a reaction, as expected. I think that was drawn out, that scenario back then at the time. Move down here, hit that, have a reaction, bounce, then take it out. That was your second sell signal, and that was the one that really kicked off that big impulsive drop the other day. So we rallied back to that 1952-ish resistance level, and we've been consolidating since. So gold has kind of gotten checked so far. Had a nice snapback from the lows the other day, but so far checked at that level. I still say maximum bounce target is in 1997. However, I'm thinking this one may be done at this point in time. I told you, active traders, good game of bounce there. I gave it yesterday, I think I gave it 50-50 odds whether we'd reverse here and go on down or move up there. Either way, that's where I favor us going down to. So, if you could short here, if you covered your shorts there, reshort here, or what I still like is a scale-in process. Half position here, half position if we get up there. Let's look at silver, because that's also going to come into play. I think what's going to happen here is a lot of traders are watching and trading silver. That's my preferred proxy lately, because like I said, more bang for your buck. It's certainly dropped more, even since that last objective short entry I highlighted here last week. There was that 15% drop, and that was hit. That was nice, a quick 15% drop in silver, right to the trend line. A little bit of a momentum fueled overshoot. Again, I had intersecting uptrend line plus price support there at 24,573. Again, momentum fueled overshoot and snapped right back above it. And so far, the bounce has been good for a, what is that, about a 15% bounce from the lows. So, this is, again, the world of active trader stuff. So as an active trader, if you, covered at that point in time, you either averted or avoided a 15% give back in profits, or if you reversed, you made, another 15% on the heels of making, 15+% on the first drop. So that's the world of active trading. And, again, it's not for everybody. I recognize that. So a swing trader would say, here's your objective short levels, or if you were long and you didn't heed the warnings on the charts before, but this drop scared you and you wanted out, well, these are your same objective levels, I think, to exit. Or, and this holds true for anybody that might have jumped in the other day because I showed us that support, oversold, where bounce was likely. The other thing is just tighten up stops and let it run. Maybe I'm wrong. Maybe we're going to blast off the new highs and beyond, and then we keep going up. And that's what trailing your stops will do. It'll keep you in a trade. It all depends on your outlook on gold or silver. But mine right now is that this is we hit major resistance, and it's good for a trend trade or a swing trade, at least to the downside, and that we will soon start the next wave down to my next target there, 22,565, give or take. These are, of course, the actual support levels where reaction's likely. You may want to step in a little. It depends. When you're in free fall mode, that's when momentum fueled overshoots are likely, so you don't have to cover early on a short trade. It all depends on if and how we get there. If we kind of meander on down there, that's where you might want to cover a little bit early. And then ultimately, like I said before all said and done, I think we come on down here to this uptrend line and maybe have a momentum fueled overshoot of that, possibly down to this target zone here, about 18,878 up to 19,835. All right, so that's update on silver and gold. I know a lot of you don't trade futures. I just like although I like trading them, I also like using the charts because it's showing me things that I don't see, you can't see on the ETS. This is SLV, the silver ETF, and GLD, and that's the round-the-clock trading. What's going on, between 4 p.m. And 9:30 a.m. when the market opens and these guys are closed. So this is a 60-minute. No, this is a daily chart, and again, targets remain minimum swing target 2147 in that uptrend line. So that tells you we have about, depending on if and when we reverse, about another 14% downside before my minimum targets hit. If that gets taken out, that opens the door for a move back here at about 1767. That would be about another 29% drop from where we're at right now. And I know quite a few on the site like this one, ZSL. That's the ultra short silver ETF. I believe it's 2-time leveraged, so 200% inverse the price of silver. Little wedge breakout there, divergent low. There was that first thrust up, after we pretty much back tested right there, and then rallied about, remember it's leveraged, so that was about a 38% rally right there off the low. Next target, or let's just say my minimum swing target here, is still about another 29% higher right there at about 1048. And there's a zone here, or let's say the next target. You have a downtrend line and $12 resistance, so we'll call it about 1050 up to about $12 be an optimal swing zone. And if we get those deeper pullback targets in silver I was just covering, it's possible to see ZSL come all the way up here back to that 1916 level. That'd be about 132% lift. But remember, you have to factor in that leverage. If you take this, you would take, let's say you go long ZSL. Well, ideally you want to go long half as much as you would normally short SLV. Some people use these because they can't short. They are trading in an IRA or a regular brokerage account that's not a margin account. Therefore, you can't short SLV. So you can buy ZSL, but the thing is, if you're going to short 50,000, you only then want to go long 25,000 as ZSL. Otherwise, you're increasing your exposure, because these numbers cut both ways. I keep talking about the 40% run here, and the potential for another 28 to maybe even as much as 100-something% profit. Well, it works the same in reverse. If silver turns around and rockets up another 10%, this thing's going to drop 20. So you have to keep that in mind, and that's where that whole beta adjusted position sizing thing I like to talk about comes in, where you take and also keep in mind that silver is more volatile than gold in itself. So going back to that number, of whatever your number is, whether it's 5,000, 50,000, or 5 million, whatever your position size is, if you were going to trade normally 50,000 in gold, you might want to only do 40,000 in silver, because silver tends to move more than gold when it's moving. And last but not least, the miners. Of course, the silver miners are rallying today with silver, and as are the gold miners. So here's GDX. There was that big rising wedge pattern. There was a breakdown, gap down below the wedge. Hit my first target, 39.09. Hit it again the next day, yesterday, and bouncing today. So same story. I was expecting a lift in the metals. Potential flagging action there. Again, you don't see candles, but a gap is an impulsive move down. So that'd be your flagpole flag. Whether it proves to be a bear flag or not, what you need to see is a breakdown. You want to see it impulsive. You want to see a break below the flag. And because the flag formed right on support, you really want to see that 39 level taken out. And then that should open the door for a larger move down, at least to that next target I have there at 37.47. And that alone would be a drop of about 7.5%. And if we hit the measured target on the flag, well, you just take the distance of the flagpole and then add that to where the highest part of the flag, and that would give us a target somewhere down around here. I'll put that in level up for you. If that should that flag continue to or pan out, it's fully developed right now. We just need to see reversal. So it would take us down to about, and that's some price resistance there, or price support, about 34.60. And if things get ugly, target on GDX 31.33. So first things first, let's see those next sell signals on gold and silver, and if we get those, the miners will follow, and that's where we'll go. All right, we'll wrap it up here, and if I see anything else that stands out, I'll let you know. The ag commodities, they continue to, the charts still look constructive. Some of those ag input stocks I highlighted recently, the ones that have broken out, triggered buy signals, look good. Others still are pending buy signals, so it's not an all clear in that sector yet, but those are, again, some of the things I'm watching right now. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.